You've got the 5 biggest stocks in the U.S. accounting for about 17% of all the global stock markets, according to Goldman Sachs. How do you characterize the importance of these earnings report moving forward?
Dessai, good to be on. This is clearly a very important week for earnings across the board, and that could set the tone for the AI trade going into the end of the year as well as for 2026. And if you look at earnings so far coming into this quarter, they have been pretty good. But I think two factors investors will be paying attention to very closely. Number one is CapEx guidance from these hyperscalers. Now, ideally, you want to see CapEx revised to the upside because that suggests that there is confidence in this AI build-out that we're seeing. And number two, you also want to see positive surprises when it comes to AI revenues across the board, right? Be it cloud infrastructure, digital ads, search, because that provides justification for this investment and for this build out that we're seeing. It's really the CapEx and monetization interplay that will drive the markets forward into 2026.
I'm looking at your notes here. Hyperscaler CapEx could reach $350 billion this year, $490 billion next year. Those are enormous stakes. What happens if the CapEx guidance does not match expectations?
Well, if the CapEx guidance does not match expectations, that suggests that maybe the hyperscalers are not seeing the kind of efficiencies that they expected out of AI, and that maybe some of the innovation that we expected out of AI is tapering off. But we don't think that that is the case. If you look at demand for AI compute on the other end today, demand outstrips supply for almost a 10-to-1 equation there. And so you have, traditional enterprises, you have all this innovation that is on the other end. And when you think about consumer use of AI as well, ChatGPT and some of the other apps, we're seeing really strong numbers from those companies also. So this is really an opportunity for the hyperscalers to continue to invest and monetize all that demand.
When you look at that CapEx, is it a concern in your mind at all that perhaps it's leading to a bubble?
Well, in our view, it is actually a healthy sign that the market is concerned about this being a bubble. But that said, if you look at AI multiples, they are nowhere near previous bubbles that we have seen, like the dot-com bubble. And on the other hand, AI is being funded by actual real cash flows. So if monetization scales, we think that this investment cycle will scale. And today, from an investor's perspective and from an allocator's perspective, as this AI J curve accelerates, I think the bigger risk is of leaving returns on the table.
We have Microsoft and Alphabet this week. I want to ask you about Amazon, which has sort of been the laggard in the group. What are you expecting?
Yes, clearly, if you look at the hyperscalers, Amazon has been a bit of a laggard so far this year. And I think the market has been penalizing Amazon for a lack of coherent AI monetization strategy. And clearly, they have AWS. So they are in a very good position to bring AI to traditional enterprises and to the broader economy. And I think management has to clarify how they plan on, again, growing AI mix into the cloud computing workload. But again, from a distribution standpoint, they are extremely well advantaged. And I think this could be a turning point for the company if they come out with a really strong print.